Hey, what's up, everybody? We had a little bit of a snafu with the Wi-Fi, but we're good now. Hope everybody's doing well. Good to be back. Good to be getting caught up. That's actually the entire goal for the stream today, really is I just need to get caught up. I didn't really look too hard at the markets today. I had a couple small trades, but that's more based on not like news and stuff like that. It's just based on stuff that I typically do based on certain pricing conditions and stuff. So all that means is those are trades that I don't want to call them purely programmatic, but they really just depend on a series of conditions that are easy to spot in isolation. So it's not like this overall connection that I typically maintain with the market. The game plan is to get caught back up and definitely to get that connection reestablished. So my game plan for today is literally just going through the market and seeing what's sticking out, trying to identify trends, the background knowledge that I typically would maintain. However, today will be pretty quick. I have a bunch of other stuff that I'm working on. So it's really, this typically is like a several day process for me, maybe like 2-3 days to get fully plugged back in. So I am going to start with just looking through the markets as a whole and seeing if anything sticks out. So small caps have been really, really strong, and I've obviously been seeing that for a little while now. I didn't realize it was quite that strong though. So a lot of this bodes well stemming from Powell and his comments. Let's take a look at the FOMC watch tool. I haven't seen this in a little bit. And take a peek at what's being priced in currently. Let's see. All right, so the biggest change from about a week or from a month ago is about the same, which is the probability of a cut in September, and that's generally been maintained even through Jackson Hole. And then in October, it looks like 34 of an additional cut. The thing to remember is one of the things that's being priced into 29 October is the 400 to the 425, right? So a cut here, whereas if we take a look at 19 or 17 SEP, the 400, 425, that's obviously the cut that's being priced in here. So when you see this 90%, you have to take that into account. And then 10Ds, something beyond that, 27.5, if you want here. Got it. So bonds are clearly showing at least a pretty solid probability of 25 bips, which we see here, with the potential for like half a point to come down. Not bad, but just such a far cry from what was originally planned here. Like, this is a really, really long ways from what was originally planned for this year. So it's been very, very slow on the rate cut expectation, and yet the market's still been super, super resilient. So that, I think, touches on how insanely strong earnings have been. This past earnings season was really, really strong. And we are in the process of genuinely a highly disruptive technology, being AI. I'm actually in the process of building out hopefully a few part series for the pro members. What I want to do is for the market segment that we do on Tuesdays, I want to do like 3 or 4 of them where we're really honing in on the specific elements of AI. We've done some overviews previously and attached tickers of interest in each, but I want to take another pass and clearly try to flag some of them for different stages of the AI plays. For those familiar, I've been trading Palantir for a while. I actually went through a series of adjustments where I had flattened the position and then I had reopened part of it. And now it's sized down significantly from what it was. And it's also in a completely different options chain than what I had previously. All of that's to say is I completely restructured this trade. And it's based on a few things, but the fundamental concepts still apply fully, in my opinion. I still think Palantir looks really, really strong. That being said, there is a reality to valuations. However, I was literally just talking with my buddy Joe about this earlier today because valuations are really, really interesting. And it's funny because a lot of my friends trade Palantir. I have one friend that has a bunch of positions. I have other friends that just have a couple shares. So I talk to a lot of my friends about Palantir, and the reason why that comment is notable is because a lot of these people are more casuals, right? They just see a company that's popping up like Open. That one you literally can't have missed in the last, few weeks at least. And they're really, when you see something break to those levels, it's very interesting because it tells you a lot about how much those kinds of companies are permeating. And I was talking to a few friends, Joe was one of them, and then I had a couple other friends that I was talking to recently about Palantir. And the topic of valuation really comes up for those that are a little more familiar with markets, but are, again, arm's distance. And it's because if we think about valuations, it's really, really important to contextualize them. There's a lot of great studies out there, by the way, on valuations. So let's take a look at S&P PE ratio chart. Yeah, here we go. So this one looks okay. So this is going back, this goes back a really long time to 28. That's actually awesome. Really, really good time. Let's just take a look at what S&P PE ratios are flagged at today. This is saying, I don't know how far over I can get before it cuts. It says May is 28. And hey, what's up, Lauren? Good to see you. Lauren says, does valuation matter a ton in a swing trade? I guess it depends on how you classify a swing trade, and it indirectly does. And the reason why I say that is because it's a meta response, but it's still an important response for accuracy. And I'll explain what I mean. So if we think about, oh, that's gross. It's like rubber has gotten kind of nasty on my little pen. So if we think about stock price, so we have a chart and we have stock price. If we think about the ultimate drivers of a stock price, what are the drivers of a stock price? Who can tell me? You know the answer to this. This is like base fundamentals. If we look at the movement of stock price, what's the driver of it? Any guesses? Earnings growth? That's not it. There you go. Greg is on it. Supply and demand. Price and volume. This is exactly what I was about to say surprise, like South Park, when they have the dude that does like the shitty walk Asian restaurant in South Park, which is hilarious. But it's supply and demand. And how do we look at supply and demand in the market? We look at supply and demand through price and volume. This is how we visualize supply and demand. So if I take you over to a chart and we visualize supply and demand, I have price and I have volume. This is a standard market lens to understand who wants what in what quantity at what price. So if I see something, remove the concept of stocks entirely. If I see something, let's just call this a widget. This is a widget. This is widget 1. And then we have another widget, which, by the way, is like the greatest term for nebulous things. Widget is such a fun word. And let's say widget 1 currently has 2 people standing in line. This person is willing to buy it for $5. This person is willing to buy it for $5.50. And then let's say widget 2 has 40 people, and let's say across those 40 people, the value that they want to get it for starts at $5, but then it goes up to $35. This is effectively what stock price is. What happens is this first person gets a fill. They get the widget. The price of the widget goes up just a little bit because the demand has decreased supply. Then the next person steps up and they make the decision to take it for $5.50. However, after the $5.50, there's nobody else here. Nobody else wants this thing beyond that price of $5.50. That's the value of this widget at that point in time. Whereas widget 2 is clearly seen as more valuable because there's 40 people lined up. They start at the same price. The first person says, I really want this for $5. But then there's people willing to pay up to $35 for this very, very same thing. So this translates into Lauren's very simple question of, does valuation matter a ton in a swing trade? The way it matters in a swing trade, because again, swing trade is a weird one because you could define that as a lot of different time frames. You could say a swing trade is a few days to a few weeks, sometimes maybe a few months. Then you start getting a little closer to positional, but there are, long swings. It's one of those more nebulous windowed terms. But if we think about the impact to supply and demand, this comes from a million different things. This comes from things like catalysts, news cycle, business ops, and things like valuations. So Palantir is a great example of valuation being at least part of the equation. Does that mean it's the entire part of the equation? No, but it's part of the equation. Because if you look at the sell-off, it wasn't really due to kind of anything. It wasn't like a defined thing that led to this. There wasn't a point where it was like, oh, Palantir's CEO goes to, what the fuck was that concert? A Coldplay concert or some weird band that is really strange to cheat on your spouses with your HR lady. But whatever that one was, not like the CEO from this did that. And it saw a big turnover of some of the key players. Like that didn't happen here. Yet, if we take a look at this move, this is not a joke of a move. It's a 25.5% decline. Now, this is more normal for companies growing like this and more volatile names, but that's besides the point. The main point here is that this 25.5% sell-off wasn't born out of some crazy change in the underlying structure of the company in any way. Yet it happened nonetheless. And this can happen for a bunch of different reasons, but one of them is very simple. It's as the stock starts selling, there's not enough buyers that want it here at 177.96. Then there's not enough buyers here at 174.69, and so on and so forth, right? Supply and demand at work. So to take it and circle back to, again, a very simple question, but it has a lot rooted in it, a lot of context. As you guys know, this is what I do when we do these live streams together, is I'll still do my best to give you the bubbled up simple answer, but I'm going to explain the back end to you. And sometimes that can be a little annoying, especially I know hearing it depends and stuff like that can jokingly, but also seriously get a little bit annoying when you just want a straight answer. However, the devil's in the details. All of this nuance ultimately matters. All of this nuance is ultimately what helps traders create better process, better informed decision making. Because as you all know, I'm really not interested in trying to turn traders onto the next hot stock to get you a couple bucks over the next week. That is literally the definition of short-sightedness, near-term gratification. And we still get a little bit of an element of that because I talk to you guys pretty frequently, especially during like the Sunday prep sessions, right? Where we're looking at stuff that looks interesting. But I never go through those in the context of how do I find the next stock that's going to move a few points that can be monetized. That's really not the intent. It is to show the actual practical side of trading in a little bit more detail. It's always ultimately with the intent of equipping a skill set, because trading, as I will always remind you guys, is not something that's done over a year or 2 years or 3 years. Your career as a trader hopefully will span quite a long time. And the funniest thing is that there's so many traders that get into trading hoping to make $1,000 for whatever it is that they want to buy, right? This thing that they want to buy. And the funniest thing is for those kinds of people that might get that $1,000, if they don't immediately get out, kind of like a casino, after they get that $1,000, if they're lucky enough to get it in the first place, the overwhelming probability is for them to light that money on fire because we don't actually understand the system that we're interacting with, which ultimately is just out of respect for the system. Because investing in trading, you can make a lot of money doing this. That's the cool part. It really is the cool part. There's no ceiling to what you can make as a trader. It's one of the very, very, very few career fields that has no natural restriction point other than when you become too big and you can actually start moving the market. But for the vast majority of retail traders, you're not going to see the size that requires, meaning trading in the tens and hundreds of millions of dollars in single positions, not portfolio value there. You can easily have a portfolio that's even hundreds of millions. But even at a portfolio that's at hundreds of millions, there's enough liquidity for you to trade that across assets using futures and stuff like that. That's not difficult. But you start to become quite constrained when you're in the billions and you're trying to put on a $10 million position on a single stock. That's where it gets tricky. And that's where you see people like Buffett that sit so much in cash. A lot of people very frequently are staring at the cash pile saying, oh my God, Buffett is sitting in cash. This is because he sees a crash coming. Everybody take heed. But it's just really not the case. There's an element to that, but he said it himself during multiple shareholder meetings, where it can be really, really difficult to find a place to logically use the money, meaning at a size that makes sense for the portfolio. And if you take a look at his portfolio, he has a bunch of stuff that's at 0.5%, less than 1% of the total portfolio. It's because it's difficult to get that size on when you are that capitalized. And it's also why when you see Buffett talking about how easy it is, he had a great conversation. This was a while ago, talking about how easy it is for smaller investors to make money. And I actually agree with him in a sense, because if you can find stuff that is valued fairly well, but might offer a little bit of opportunity, there's a ton of upside potential and you don't need that many to hit. A lot of people misconstrue some of what he's doing in terms of looking for the cigarette butts or the cigar butts, I think he used. A lot of that is just a way to decrease risk. That's a big part of what he's trying to do with those kinds of positions. Because when you're putting on a really big position, you can't just get out if it starts to go down, literally just like I did in Palantir. Because I got out of Palantir, does that mean that I'm no longer bullish? No, I'm still quite bullish on Palantir. But I have the luxury of being a smaller retail trader where if I see the things starting to go down, there's nothing that stops me from taking profits, waiting until it starts to base like it's have, and then to start building a position again. Why is that? It's because what that does is it limits my drawdown from that 25% from here to here. And the drawdown from peak instead goes from here to maybe here, something like that. So you cut off, I actually don't know on a percentage basis what that difference is. Let's see. 12%. Oh, that's actually hilarious. 12 and a quarter. So you literally cut it almost directly in half. And the benefit of that then is that you have more money at the end of that management to then use, to then redeploy. And notice how the context I'm giving you isn't like perfectly timing it. I very rarely, if ever, perfectly time anything. It's just an unreasonable expectation. It's not really how markets work, although a lot of traders spend an inordinate amount of time trying to time things perfectly, which I struggle to see if that can be like reliably done long term. And I say perfectly timed. That's a specific term. It's very possible to time the market. Very, very possible. It's just that part's just not as easy as people think, but I time the market. It's a big part of what I do, actually. So let's get back. I want to actually go through the news a little bit. And then in the meantime, if there's anything that you think we should take a look at, please let me know. I do want to take a look at Open just because that's been really rambunctious. I have a position on in there now, literally just playing the volatility that's in there because the volatility is fucking wild. And for options traders like me, that's kind of like a shark to blood. It's very, very difficult to not see vol like that and go play it. But we'll take a look at that in a little bit. I'm just reading some news highlights. So on the 18th, we know Trump had some Euro and NATO leaders, that whole thing going on. And there's been the back and forth between like the meetings with Zelensky and Putin and, you know, trying to do a joint meeting and all that stuff. I think you guys are aware of that. On the 19th, there was more of the Palestinians coming out of Gaza as Israel was starting to scale their attacks up a bit. So the main thing there, I think, is just that conflict isn't slowing, always has the potential to bubble up, boil over. Then there was also the Democratic lawmakers in Texas. There was a walkout. They were looking to block a Republican redistricting plan. I'm just reading a news summary, by the way. So this isn't like this stuff that I'm cherry picking. This is all just from Gemini. Trump made headlines with this announcement, executive order to ban mail-in ballots, voting machines. So that doesn't really apply here. Wednesday, Texas redistricting battle continued. Other states considering similar mid-decade congressional map changes. And tech. Okay, so we do need to take a closer look at tech with the potential acquisition of Intel's contract chip-making business by SoftBank. The 21st international focused Israel-Palestine conflict. DOJ investigation into Epstein. Tensions between White House Federal Reserve highlighted Trump's call for resignation. of Federal Reserve Governor Lisa Cook. So that's an interesting move, definitely ramping that up. I'm just focusing on the economics or the actual economic and market stuff instead of the non stuff. Oh, this is so funny. On Wall Street Journal, literally right now, it says Trump said he is removing Fed Governor Lisa Cook, citing allegations that she submitted fraudulent information mortgage application. Market's down slightly, 0.7%, 0.07% on E-minis, 0.07 on Russell. They were both, all of these were up just a little while ago when we were talking. And NASDAQ leading to the downside at 0.17. So muted, but not crazy. Vol is still slightly elevated in the 17 handle. Where did we leave off? Saturday, the 23rd. Humanitarian crisis in Gaza. Voting methods. Okay. Then yesterday, 34th year of independence for Ukraine from the Soviet Union. With the war ongoing, Russia claimed Ukrainian drone attack caused fire at a nuclear plant. That's obviously just trying to flag escalations. That's what all that is. It's right now, it's positioning in the public eye. U.S. reports emerge potential military deployment to Chicago as part of Trump's crackdown on crime and immigration. Okay. And then there's been a scam. This is interesting. Involving fake student identities to steal college financial aid. That's really, really interesting. And then so far today, we know that the market came down a little bit. NVIDIA is reporting COVID-19 vaccine by Trump potential ban. So that led to a bleed over into healthcare. All right, cool. So now the next thing that I want to do is just take a look through this update. If anything else sticks out to me. There was also, I saw some talks about tariffs. I don't remember the exact context, but I want to see. Concerns about tariffs impact on inflation, corporate profits weighed on stocks. Again, one thing to keep in mind is as I'm reading like these headlines, you can't take these headlines seriously. This is the element where, again, people really like simple, discrete explanations for things, even if they don't exist. And in this context, they really don't exist. This stuff is pretty nuanced. Give me 1 sec. Gotta let the dude in. Dude is in and popped in the bed. Post dinner. Homie's living the best life. So yeah, as I'm reading these, don't take them that seriously. I read them just to see what's being said and to understand like the tone and things. But this, as you know, the simple explanations of things, it's not a thing. It's not how the markets work. But let's see. So 10-year yield up 3 basis points to 4.25, 4.28. And chip makers seem to be doing okay. So this is another thing I've been seeing a ton. This is the thing I've been seeing a ton. Michael says, I wonder why all 21 drug stocks like PFE and BMI all were down today. We know why, don't we? We talked about that literally just a couple minutes ago. Maybe you just joined. There was a discussion about a potential ban on different vaccines by the Trump admin. So pretty much everything that has a hand in the vaccine world is pulling back a little bit, at least partially due to that, right? There's going to be some sort of reaction to that news. And that's mostly what I see there. So we could take a look at some of the individual ones, but Michael, I think that's the primary that you see going on, which super logical to me. So this is interesting, but I did not take Powell's comments on Friday as like super dovish. I was surprised it got flagged as that. Downside risk to the labor market may warrant adjusting our policy stance, because they even talked about essentially stepping away from the 2% inflation benchmark. So that whole thing is real weird to me. Concerns about how much the Fed can lower interest rates, fears inflation will rise from the still elevated levels as Trump's tariffs move through the economy, and that's completely fair. National activity down is negative 0.19. Kind of interesting, but nothing too huge. July new home sales expectedly fell. So the housing market and real estate's been really interesting, especially just the retail side. The retail side, we're seeing a ton of homes for sale and not matching buyers. So a little bit of weakness there. That statement is also very geographically specific. There will always be hot markets, lagging markets, just like stocks. But nonetheless, writ large, we are seeing definitely inventories going up. Michael says, I didn't know all of them had vaccines. That's not the way to look at it. The way to look at moves like that, again, it's really, really important to understand how markets behave. It's not quite as one-dimensional as that. So if you think about, let's talk about just the healthcare sector. Well, first, as we do this, let's actually put the healthcare sector on back here, just for context. Healthcare. Okay. So if we take a look at healthcare, we can see pharmaceuticals as a portion of healthcare is significant. I would call it, just eyeballing off of this, maybe like 28 to 30%. I don't know the exact number. It actually wouldn't be that hard to find out. We can do that really fast so that I'm not giving you terrible information. So this is 9, and then pharmaceutical. Oh, it breaks it down as part of SPY. So it'll be a little more intensive than that. But let's just call it, this is of the sector, not of S&P. So if we have, again, I'm just ballparking it, something like maybe this. If we have that amount in stocks that are directly tied to pharmaceuticals, that means that if there is a look at vaccines to potentially start pulling some of them down, doesn't matter what they're for, just the look that they're coming under scrutiny with a potential and with a policy intent to start pulling some of them down. Again, let's go back to supply and demand of stock prices. If I'm holding Eli Lilly, Johnson & Johnson, Merck Health, Pfizer, Bristol Myers Squibb, if I'm holding these different names and I see that coming down the pike, that doesn't mean that I'm immediately bearish on all of them, but it is going to lead me to look at my position and say, might this be a spot to trim some of it in case that begins to happen? Because if that happens, that decreases naturally the profitability of these different names. Now, there's a follow-on impact from this very first stage of fact. The follow-on impact is that anybody that has supply chain with these companies is now also being looked at, meaning they can have indirect impacts. Then you take a lot of these companies, which still are in peripheral fields like biotech. And if we're looking at vaccines in the broader pharmaceutical industry, or just healthcare in general, then that absolutely can have a cascading impact to maybe we're taking a closer look at other drugs. So that naturally weighs on this. So this is all at that very first superficial lens of what's the direct impact to and from vaccines. Now, from there, we have secondary, tertiary impacts. One of those, as you all are aware of at this point, because again, unlike the average traders, you guys at this point definitely are way, way, way more versed. It's just a function of seeing this stuff long enough, which is ETF rebalancing. If I'm a big pension fund, AKA big money, and I have a bunch of millions, hundreds of millions of dollars in different ETFs and stuff like that, and I think that a big part of this might start to slow down. Maybe I have specific holdings in the healthcare sector, and I decide to start just trimming some of my healthcare sector ETF positions. As I'm trimming, that increases supply. If this is not met with matched increase in demand, this actually typically will have a decrease in demand. As supply is up, demand is down, price goes down. So then as price is going down, the ETFs themselves are holding these. So then this price movement, this move in the ETF can bleed into the constituents. So it's not even based on the individual holdings necessarily, it's the concert of all of these pieces together, coalescing to lead to all different kinds of super interesting market movements. So again, another really simple observation from Michael that's just talking about, different kinds of drug stocks and then the impact. And the interesting thing is not all of them even need to be in the vaccine business. But if they have any peripheral contact to any sort of expectation of bleed through effect of the policy standpoint of the people that might be looking at these things, there's a potential impact from there. Remember, the markets are forecasting. They are discounting future cash flows. So any expected change to those cash flows absolutely will have an impact to price. And as per usual, supply and demand. This is why the markets are fucking fascinating. Great way to learn about a ton of stuff too. It's one of my favorite things. Trump, more stuff from Trump. Trump says, I will stand up to the countries that attack our incredible American tech, digital taxes, digital services. Oh, that's actually kind of interesting. That's good. Good rhetoric, at least. Interesting. Let's see. The markets this week focus on tariff news, depending on ending Ukraine, Russia. Yeah. Okay. We already talked about this. Earnings reports indicate that S&P earnings Q2 tracked to rise 9.1% year over year, which is actually really, really solid. That's good. We already talked about rates. Let's take a look at some of the movers. Furniture coming from other countries into the US will be tariffed. Okay, so maybe that's what I was looking at. RH, this isn't Robinhood. I forgot what RH. Who are you? Something hardware? RH Waterworks and real estate. Oh, interesting. So they do a ton of shit. Not limited to just furniture. Okay. Williams Sonoma down on the news. So again, going back to process-based decisions, this is a great catalyst. So when we see something like this, we can take a look at these three names, for example. So let's take a look at these names quickly. So we'll take a look here. What I would expect to see is a change in volatility, and I would expect to see puts becoming more expensive. So let's see. So we can clearly see vol is ticking up. That's clear as day right here. So vol essentially moved from 53-ish to 57. So that's a decent uptick in vol. Let's take a look at the term structure. Look at puts. So a bunch of puts actually being sold. That's a little more common than you might think, especially in this kind of event. We do see put skew. And we're now in backwardation in terms of vol. So those kind of distortions are all super tradable. Let's take a look at actual vol. Everything in this is going to be perpetually skewed. I don't think there's a way to get rid of that. Kind of annoying. Which 7-day? We'll just kill 7-day. There we go. Yeah, so we can see 30 and 60-day up pretty significantly. About 4 or 5%. Take a look at percentile. In the 80s. So these are really high vol names. And again, you can take a look that we're primarily in backwardation, as I was talking about before. So there's a lot of really interesting moves here, right? Stuff like selling front vol. And its bid, it's a little dirty, but would be fine. It's also going to happen when vol is high. This, again, this is the exact kind of stuff that I look for. So I am actually adding this to my to-do list. And the to-do list really will be taking a look at it tomorrow, checking out pricing and stuff like that to see if there's something that looks appealing. I'm just marking a couple trades that I want to take a look. Oh. So that's one. It kind of applies to this whole thing. Can also do pairs trades and all that. So we saw this. This is another exact similar concept, specifically Moderna, because it's typically higher vol. And this is essentially what I spend most of my time, especially on like the Sunday prep session, doing this exact stuff. Because it's not always about finding individual trades. It's finding things, effects, news, events that are interesting at a given point in time that either immediately present interesting trade opportunities or become more interesting with respect to trade opportunities. So like these here, this is a pretty immediate interest. And this has been struggling for a while. I would expect to see a similar behavioral pattern. I would expect to see vol up And I would expect to see front vol slightly elevated, which is not actually as elevated as expected, slightly. It's actually kinked all over the place. Curious. Still big call skew. Let's take a look at vol. And let's get rid of the front. Let's just the price. Still decent call skew. So that itself is actually quite interesting. The fact that the calls are still so rich, the puts even on the news. The vol out. Part of it is also the floor, right? Because on the call side, we're pricing out to the fucking 100 strike. But to the downside, we're compressed just to 12.5 as a perceived floor. And that's at, 0.01 delta. But vol here is also elevated. Definitely 10's risk premium. The last thing I want to take a look at really quick. Earnings, because we still have a couple weeks of earnings. So I didn't get anything on today, but tomorrow we have Okta, which is good. That one I like to trade. ANF, ASS. So that's actually what I'm going to do now, is go through and start pricing out earnings that look interesting to me. There's still plenty to do. So I am going to sign off, get to work. Good to be back. Pro members, the links to all the videos just came out. And then for the entire community, we are back on the streams. So I'll see everybody around. Be an outlier. Catch you guys later.